Welcome everyone. My name is Agostino, and today we are going to talk about how to craft a compelling LOI, a letter of intent, to get your next multifamily deal. Now, before I get into all that stuff, let me tell you a little bit about what we do and who I am, right? So as I said, my name is Agostino. I'm with Bulletproof Cash Flow, and what my team and I do is we acquire commercial assets, all right? Mostly multifamily assets, but we've also done development, we've done net lease, we've done all kinds of real cool commercial type of deals that are either multifamily or, like I said, ground up development or adaptive reuse or Dollar Generals, Dollar Trees, Walgreens. We buy all kinds of commercial stuff, but everything begins with creating a compelling letter of intent. That's the first thing, okay? You have to have that LOI, that letter of intent, that eventually gets you to a purchase agreement and then get your deal closed. But that first step is absolutely crucial, okay? It's actually crucial, it is. Especially when it comes to multifamily deals. Multifamily is very, very competitive. Not that the other stuff isn't, it's also competitive too, but there's a great push around multifamily. All these skills we're gonna talk about today are things that you not only use for the commercial side, it can be used in residential too, perhaps, right? But like I said, part of it is learning and understanding how to put these things together. So we're gonna talk about how to produce that compelling offer to make sure your deal gets prioritized and accepted. That's the key thing, okay? So we're gonna be focused on that, okay? So in any competitive market, when you're putting in an offer, and let's say for instance, there's a deal out there and there's a big wave of people that wanna make an offer to that deal. Let's say it's on the market. You wanna at least end up in the top 3. And then from there, you have to sharpen your pencil and you have to leave enough room to go up even further if you have to, right? But that seller selects those top 3 before going on to win the deal, all right, overall. So we're gonna talk about the secrets that the top investors use to motivate the sellers to say yes to their deal. It really is a delicate art of the offer. It really is. And it separates the pros from the amateurs. So we're going to gain some insider knowledge here on how to put in offers and start winning big. So your offer is going to vary from market to market, from cycle to cycle. All right, right now we're going into a down cycle here. So offer is going to look a little different. Back in 2019, from what I heard, people on the West Coast, they're putting up hard money on day 1 to get the deal, like to lock up the deal, right? And what I mean by hard money is money that was non-refundable on day 1. So they submit their LOI, they'll say, okay, if you accept this LOI, well, we're gonna put $100,000 that's gonna be non-refundable on the deal, first day. That's what they were doing back then. Meanwhile, here in the Midwest, that wasn't happening here, right? Same year, different market, right? So part of it is understanding what's going on in those sorts of markets and what is acceptable. So again, knowing the market, knowing that what's acceptable or not is very important. So we're going to get into some of that stuff too, okay? But really there's 5 main points we have to cover here to prepare you to put an offer on a commercial deal, okay? So point number 1, got to ask a lot of questions. So what does that mean? That means asking the seller, how would they like the offer structured? Sometimes it's just a matter of finding out what is important to the seller. So you have to get the insight. Aside from the price is important, okay? The purchase price is important. But what sort of down payment are they looking for? Typically, you know, it might be 15, 20%, all right? That's probably about right. But do they have a due diligence period in mind? What sort of terms do they find acceptable? That kind of thing. Now, understanding the motivations is absolutely important, okay? Why are they selling the deal? Maybe you can tailor the offer to meet their specific needs. Maybe they want to get into another deal. You just happen to have another deal that you might be raising money for, it might be selling, or whatever the case may be. Maybe you can work out a trade there. Understanding the motivations is important too. Sometimes you can incorporate their motivations into the next deal. Sometimes you can, sometimes you can't, right? But part of it is getting to understand what the motivations of the seller are so you could try to meet those needs. Prioritize what they want first to get what you want out of the deal too, okay? Ask questions about the deal itself. understand the mechanicals, the physical structure, things like that, okay? You may want to ask if the manager, the leasing agents, and the maintenance people are going to plan on staying, assuming they're doing a good enough job. Finding good people these days is very tough to do. So if they're doing a good job from what you can tell, maybe ask that question too. But like, I don't want to go through all the questions here, but review your due diligence checklist to create your own list of questions that you can talk to the broker about as you're walking the property, okay? So what you're also doing is ask questions about how the property was structured when the seller bought it. Because maybe they got an owner finance type deal, and maybe they're acceptable to, or amenable rather, to doing that type of deal for you too. Never know, right? It helps determine the type of seller you're dealing with, right? And maybe their model has very good terms, and maybe they might accept doing the same deal with you, okay? In any case, meeting in person, taking a tour, finding commonalities between you and the broker and you and the seller is going to separate you from the ton of other buyers that are looking at that deal. So ask questions up front so you can understand their priorities first before you draft the initial offer. Okay? You may even ask the broker for a whisper price or pricing guidance, right? That's really what it is. There's usually a number in mind that the broker's expecting to get. Sometimes it's crazy number, right? So you obviously you try to do what you can, but I mean, if the number's not realistic, it's not realistic. Be prepared for a lot of that. There's a lot of those deals going on, no matter what's going on in the market. But you want to understand what is realistic and if you can even make it into the ballpark, right? So, but building that rapport with the brokers to show that you are realistic, you're a real potential buyer to that deal. Now, if you want to know more about how to really sharpen up your skills with that, go to guide2brokers.com. Go ahead, download, there's a free ebook there, and you can go ahead and download it and check it out. It's a complete ebook. It describes everything you need to do and everything you need to know when you're getting into these sorts of deals, okay? Now, I've done this over the span of 17, 18 years at this point, right? Really started focusing on commercial about 6 years ago. And everything that I'm going through here right now are things that I've actually done, tried and true methods here too, right? So a lot of that went into these sorts of ebooks that we make available to you guys, absolutely free. So go ahead, download it, okay? Check it out, and we'll keep going, okay? So let's go into number 2, okay? Number 2 is to offer the highest price you're willing to pay up front, along with the terms, okay? So don't do this whole thing where you're bidding super low and then negotiate up, okay? There's guys that do that stuff, and for the most part, they're usually considered to be jokers when they do that, okay? Be bold, offer the best price you could possibly offer, and make sure it makes sense, right? Make sure that when you're about to submit the LOI, call the broker up, talk to them about it, talk to them about where you're at and why you're in there, okay? Coming in lower, like way lower, like typically 80% is probably the lowest you ever want to go. If you can't get to 80% of the purchase price, don't even bother. But if you're getting to like 50% of the purchase price, right, and it's not even realistic, you're wasting everybody's time, and it makes you look like you're not a serious buyer. And in any market, the last thing you want to do is look like a joker. Why? Because word gets around. If you start lowballing a whole bunch of people and all the brokers start talking about you, it's going to be very, very tough to get a deal, right? So, and what I mean by lowballer, like I said earlier, there's a lot of crappy deals out there, tons of them, okay? Maybe your number is actually the right number. At that point, you can talk to the broker, you can justify your asking price with market data, back it up, okay? Be transparent because it helps build trust to your offer. And if the broker, usually the broker knows that the asking price is way over, right? They know that. And if your number makes sense and they still say it's too low, that's fine. I mean, but have a discussion first to feel them out before you start submitting LOIs and stuff like that, right? It's really trying to get an understanding as to what sort of terms you can come up with before you start submitting LOIs. Having that rapport with a broker helps strengthen your ability to get future deals down the road, right? Think of it like this. You look at a deal and the deal's not very good, all right? And you build some rapport with that broker. Don't just to submit a 50% of the asking price and be done with it. Have a discussion, say, look, this asset sold for this amount of money. It's the same sort of thing. Or the asset that we're looking at here has all kinds of HVAC problems, delinquencies, all kinds of stuff. It's not really worth what they're asking, whatever the case may be. But come up with real, solid information and data because it makes you look like a pro. So whether you do the deal or not, that broker will remember, it's like, oh, this person knows what it is they're looking for. And they know some of the weaknesses of this deal. And they know what the pricing needs to be. So it actually could turn into a very good thing if you don't submit a crappy offer on a deal, right? One of the other things too is the terms and any type of extension. So typically, terms these days, it takes like 45 days for a lender to close these days. Ever since COVID happened, lenders have been taking a longer time to close, and it's just not just because of the lenders, but also because of all the third parties that have to get done. And what I mean by third parties is any type of bank inspections, any type of phase one, or if there's a phase two required sometimes, right, depending on the asset. So you have to make sure you bake in enough extensions in your offer too, if you need any. Okay. And what I mean is typically, sometimes what we'll do is we'll do a 45 due diligence, 45-day close, and we'll do some sort of extensions. But if we have to do an extension, if we have to pull the trigger on an extension, we'll put up extra money for those extensions too. Okay. So we'll go into that here in a second. But you have to, when you're submitting your LOI, think about if you need to have all that stuff when you're going through the deal. Okay. Which leads me to number 3. I touched on this a second ago here. Shorten your due diligence period. Now, here's the thing. If you need 45 days, the entire 45 days, and you think you might be able to do it in less times in terms of due diligence is concerned, then ask for less. However, these days, it takes all of 45 days to do due diligence, typically. And then when due diligence is up, your money goes hard, right? Then we go into the close. Go into the financing period, another 45 days these days. Again, that seems to become the new normal now. Unless you have a fund, you have a blind pool fund, you have the cash available and ready to deploy, that's another scenario, right? But typically, you want to request the minimum amount of time frame you can because you want to give the seller the certainty that you're going to close, right? So shorter is always better because it shows confidence in your ability to access and assess the deal quickly and shut it down quickly, okay? Now you have earnest money too, or it's a good faith deposit, right? So this defines when that money, that earnest money, like goes hard too. Your LOI defines all this. Right? What I mean by go hard is when is it non-refundable? So at the very, very beginning of that deal, you're going to say in the LOI, you're going to say, okay, if you accept my offer, we're going to put up 1% of the purchase price, whatever that might be, 1% of the purchase price. And at the end of the due diligence period, that money suddenly becomes non-refundable. Sometimes to even strengthen your deal further, you might say, and at the end of the due diligence period, we'll put up another 1%. If you really want to go in strong, right? You could do that too, right? And then you could put up another 1% that also becomes non-refundable and then continue on and then shut the deal down too, right? That's one way to handle it as well. There's various ways of putting together a nice, strong offer depending on how bad you want the deal. Now, keep in mind though too, right? Whenever we're talking about earnest money, that earnest money does go against the purchase price, right? So it isn't like it's over and above the purchase price. Any money you're putting it up as like earnest money or good faith deposit all counts towards the purchase price. So you're not, quote, losing anything if you have every intention of going through the deal. Okay. So Number 4, removing the financing contingencies. Now, these days, previously I would never put in a finance contingency because I was always sure that I can get my hands on the financing. These days, lenders, where we are right now in the economic cycle, can be a little bit tricky when it comes to getting deals done, right? So it's important to know what I typically do is when I start looking at a deal, just looking at the deal, I have a group of lenders that I work with, and I share the deal with them in a very secretive manner because I don't want them obviously telling all their buddies about it, but I want them to really start looking for a potential lender for that deal. Because remember, if you've caught previous trainings here, the lenders like certain deals in certain locations, and if that lender really likes to do that deal in that location, then great. You want to do business with those folks, okay? But the thing is though, by removing any financing contingencies, it removes any risk for the seller. That's what it does, right? So when you have high confidence in your ability to secure the financing that you need, you can remove that financing contingency, right? But like I said, what you're doing is you're doing it early on. You're doing it even like at the time of even before the LOI is even drafted. That's what I would do. I always know where all the money's coming from before I even submit the LOI. I know where the money's coming from. That's how I do it. I like to go into a deal when I know I want a deal. I will do all I can to grab that deal, right? So you have to be extremely sure that you want to do the deal, right? And it's these days seller financing is another way to get deals done. Now, typically, back in the 70s, when things were we had a very similar situation, crazy interest rates coming up. Back in the 70s, I think interest rates were going into the double digits. It was nuts. But the way that deals were getting done back then was something called seller financing or some sort of owner carryback. There's, I don't want to go into some of the intricacies of that, but there's a seller financing and then there's a land contract. Very, very similar, but they're different. I did another webinar on that, so you should definitely check that out. But thing is that if your intention is to go that route because you think the number might work better that way, don't open with that. All right, don't immediately talk to the broker, pick up the phone, have the broker answer and say, well, they do seller financing. Don't do that, okay? Don't talk about that the very first thing. Go look at the deal, run your numbers, build the rapport, figure out where you have to be, and then afterwards, you can explain to the broker, when you submit the LOI, the rationale of why you need some sort of seller finance or owner carryback or whatever the case may be, okay? It's a great way to, again, build the rapport and express your rationale as to why you need the owner financing on the deal, but just don't flat out open with it. Never just open with it, okay? It's not a good idea. So now before I go on, if you're liking what you see and you're catching this after the stream here and you're watching this on YouTube, do me a favor, like the video, subscribe to the channel right here on the YouTube channel, right? God, we've done well over 700 videos on YouTube, right? We've done over 400 interviews on our Bulletproof Cash Flow show. So we want to try to bring the best we can from the experts in the industry to you guys to help you guys become better investors. So by all means, smash that like button if you like what you're getting, okay? And it really helps us out. I really appreciate it. So let's keep rolling here, okay? Let's keep rolling. So, number 5, you have to know that you want the deal, okay? Now, I said this earlier. Whenever I have my eyes on a deal, I know that I want it, I get to work immediately trying to determine where all the equity and all the debt's going to be coming from. Now, obviously, the equity, we raise our equity from outside investors, but sometimes we may even use our own, right? But I like to have an idea as to where that equity is coming from. The debt, the bank, the lender, okay? That's another big part of it too. And the lender, they are your biggest investor, if you think about it. The lender might be putting up 60 to 80% of the entire purchase price. The lender is your biggest investor in the deal. So I like to know where that lender is coming from before I even submit the LOI. That's what I like to do, right? Do your homework up front with your lender broker and know how it's going to look. Then from there, you can clearly explain why this deal works for you. And you explain it not only to your lender broker or to the lenders, to your investors, but also to the broker representing the seller. You can share your vision for how you plan on operating the asset successfully. What they've done is great, and here's what you're going to do to take it to the next level. It's kind of like it shows that you have a vision for the property. It shows that you're excited about the property, right? And that's what they want to see. If you just go in there ho-hum and not really care, believe me, the brokers, they notice stuff like that. They know if the person they're walking through the property is serious or not. Now, as you're walking through, provide details about your background or your track record of closing other deals. This helps build the credibility. If you have a good bio as well, submit it with your LOI, because what they're going to do is they're going to share it with the seller. Now, if you don't have a background, you don't have a bio, okay, typically what I recommend is partner up with someone that does. Don't get greedy. Don't ever get greedy, okay? It's okay to give up a part of the ownership to an experienced operator that has your best interest at heart and the best interest of the asset itself. It's okay to give up some of that and get to leverage their experience and their knowledge into the deal. Nothing wrong with that. And you get to bring their bio along with you as a partner in the deal. Right? So if you're able to do that, you're able to leverage someone else's background and experience to help you shut down that deal. Why not do that? It's an amazing way to help you lock up deals. Because remember, it's not just about money. They want to have the certainty that the deal is going to close. That's what the seller cares about. The seller wants to know that they're going to shut down that deal. Because here's the thing. As soon as they list that deal with a broker, they've already started spending the money in their head. They've already started spending it. They're just like, oh my God, as soon as I sell this deal, I'm going to buy a boat. I'm going to buy a car. I'm going to buy that house. I'm going to do all this crazy stuff. It's going to be amazing. I can't wait to sell it. So that's why they want certainty. And the way you do that is by demonstrating the certainty to the broker. Okay, so you have to display the confidence that you are the one to buy the asset. Okay? That timeline that you establish in the LOI is absolutely critical. So you have to communicate quickly, communicate efficiently, always answer the phone when they're calling, be flexible, be super easy to work with. Easy to work with, okay? I have this rule that I found that the easier that someone is to work with, the easier the whole transaction is going to be. Same thing goes with lenders. If the lender is easy to work with going into the deal, the easier the transaction is going to be after the deal is closed, into the years that you're running the asset. Okay, it's important to note that. When you're doing the deal, the easier you are to work with, the seller knows that, okay, look, this person's easy to work with. They'll shut down the deal. It's going to be no fanfare, just get the deal done, right? That's what they want to know. So, when you have these 5 things answered, now you start preparing and writing the LOI. Okay, so at this point, you've asked all the questions, you understood the seller's priorities, you're going to get prepared to offer your best terms up front. You want to talk about the timeline, to accelerate the timeline if you can, remove any type of contingencies where it makes sense, of course, and express your confidence to do the deal. Okay, this will produce the most compelling offer. Now, make sure that when you write the LOI, it's very clear and concise. If the LOI is convoluted, confusing, the buyer is going to expect more of the same. Like I said, you want to be easy to work with. If it's not like that, your offer will get rejected. Now, what I recommend is when you're forming your LOI, Times New Roman font, 10-point font, maybe 11-point font, nothing crazy, okay? Make it almost read like a contract, but don't put legalese in it. Like, make it look like an official document, but don't go crazy trying to make it like I once saw an LOI, it was written in Comic Sans or something like that. Who takes that seriously? Even though the person, the buyer was an actual capable buyer, you look at this and it looks like a joke, right? You can't do that. It has to look official. And if you can make it look more like an actual PSA, even though it's not a PSA, it's still an LOI, it looks professional. Because in reality here, the attorneys are going to nail down the specifics of the PSA after the LOI is accepted. Really, that's the reality of it. So the LOI is only used as an outline for the terms of the deal and the purchase price. So it's going to define who's going to draft the PSA and how soon it's going to be delivered for all the parties to execute it. Generally, it might take 3 to 10 days. We want to try to move it fairly quickly. Again, this is the reason why when I'm looking at deals, I communicate it to the brokers, my finance broker too, the guy who's working on trying to get the lender on board. I tell my attorney about it too. I tell my entire team, okay, guys, we're chasing down this deal. Here's what we're going to do with this deal, and here's the vision for it. Here's why we're doing it. So I get the whole team involved way early on when we're looking at these types of deals. So if you've followed our material for any length of time, you know that the team that you put together is going to help you not only vet the deal out, but also close on that deal too. Okay. Now, something else to specify here too. You don't want to lock up a deal with the intent of a retrade. Okay. Meaning changing the terms of the deal after you've already agreed to a purchase price and the terms. You don't want to start changing things, okay? Sellers and brokers, they notice these things. A retrade can be the kiss of death for a deal, okay? It could damage your reputation in the marketplace too. So remember, I talk about this. I have other videos where I talk about retrades as well. We have a reputation of never doing a retrade, no matter what. But this means going into a deal, understanding what it is we're getting into, asking all the right questions, everything from aluminum wiring to any sort of damage that might be hidden or whatever that we just can't see. We ask everything we can to reduce the chances of a retrade. Okay, so that's the thing. You want to try to ask enough questions so you don't just slam out an offer and be done with it. You want to ask enough questions to reduce the likelihood of a retrade. I once had a group that looked at one of our deals. There was some, the parking lot area had a bunch of, needed some asphalt work, right? After we accepted the offer, we had a PSA, all that stuff. They then come back and they said they wanted a credit for all this asphalt work that had to get done. Whoa, wait a second. That asphalt work was there way before when we were doing the LOI and we signed it up. It isn't like I just put it there, right? It's ridiculous. Don't do stuff like that. That's amateur hour, okay? Now, there's times when we looked at a deal and we did all of our inspections, everything's fine, but then we ran an inspection on the sewer line and we discovered that the sewer line was broken. At that case, we did ask for a retrade. We did say, hey, listen, we found the sewer line's broken. Can you go ahead and fix it for us? Or we can fix it too with a credit, right? But it's based on reality and based on things that are really happening to the asset right now, right? So, and things that they would have had to fix anyway. So these are the things they have to do. And it isn't like we're asking for millions of dollars off or whatever the case may be, right? Keep that in mind. And I want to turn this into an underwriting type of deal. I think the webinar we did last week, we went into some deep examples in that webinar. So go ahead and check that one out, okay? So keep in mind there are 4 key takeaways when you're thinking about putting together your LOI to get the deal done, okay? Number 1, get control of that deal by making a strong offer. Make the strongest offer you could possibly make up front with a good price, good terms, compelling LOI. That's what you're looking for, okay? Don't negotiate against yourself, okay? Set the tone with your best offer from the start. All right, and what I mean by don't negotiate yourself, if the broker starts saying, well, can you come up a little bit? And then next thing you know, you start increasing your price without even having a counter offer. Don't ever do that, okay? You're negotiating against yourself. Don't do that, okay? Show commitment to the offer by removing any type of contingencies, again, if possible, and accelerating the timeline to really close out any types of gaps in your ability to demonstrate that you are the buyer for the asset, okay? Put up nice, good earnest money where it makes sense, typically 1% of the purchase price, and make it easy for the seller to say yes. You want to make it so easy that the seller would have to be dumb to say no to your deal. That's how good the deal has to be. Okay. As we go into this economic cycle that we're in right now, there's still plenty of other deals out there. But remember, there's also a lot of buyers too. All right. It's becoming a buyer's market now. So understanding how to put together a good, strong offer is going to become even more important than when it was before. Okay. So putting together the right offer for the deal becomes paramount at this point, okay? Because you don't want to overpay for the deal either, okay? In any case, always highlight your experience and your track record of closing deals. You want to be recognized as a closer, so provide any type of details on the deals you've done in the past and how you're going to execute your vision for that asset, okay? And like I said, build that rapport with the brokers. Guidetobrokers.com. Go there, download the ebook. It's a great way to start introducing yourself to the brokers as a credible, real buyer that can get deals done. So check out that free download, okay? Guidetobrokers.com. Go ahead and check that out. Now, what's the second thing? You always want deals that produce stable cash flow and can lead to an opportunity for appreciation. Now, notice what I said. You're prioritizing cash flow. You might be able to push appreciation depending on the asset where it's located, but you're always looking for that cash flow, okay? You want to make sure they have enough cash flow to cover the debt, cover everything you want from day one. So positive ongoing cash flow enables you to hold the asset long term. Cash flow provides the funds that you need for the maintenance, any type of improvements, the debt pay down, that enhance the asset over time as well. So as the asset improves, the market conditions change, the area starts getting better, okay, it might appreciate in value too. So that cash flow will drive the long-term appreciation as well as the work that you're putting into the deal to make it a better asset too. So another key factor is to always understand the taxes and who pays what, especially at closing, okay? This is gonna vary from city to city, but what I like to do is whatever's customary in that local market as to who pays what taxes when, I like to just replicate whatever gets done. The brokers will typically know this kind of stuff, okay? But in any case, understand the tax bill before you close, all right, during due diligence, and how it's going to impact your overall valuation is extremely important to the overall valuation of the asset itself. You got to know how much taxes are going to go up after you close the deal, okay? There's some places where they'll multiply your taxes by 4 times. I've seen it happen, all right? Know that up front if you can. Try to figure that out if you can, because if it's a kiss of death on a deal, after you close it, like say 2 years ago, and all of a sudden the taxes go up 4 times, you're done. That deal turns out to be a dog at that point. That's the last thing you want, okay? Do that up front. All right. Talk to a tax attorney that can help you with that too. Maybe a real estate attorney might also be able to figure it out for you, right? But a tax attorney will also be able to give you some idea too. All right. Spend the money for a couple of hours of time with a good tax attorney that'll know the ins and outs of how to negotiate and deal with that part of it. It's well worth the money. Trust me. Okay. Number 3. The passive income should exceed your earned income. So make it a goal, make it a personal goal that your rental property, that whenever it produces cash flow, it'll exceed your earned income for your employment income, right? So this means starting small if you have to, reinvest your cash flow to buy more assets, all right? Cash flow is compounded over time as you put more money into nice, strong cash flowing assets. So by building multiple properties and multiple cash flow streams in those assets, you can surpass your active employment income too, right? So this is really the priority you're thinking about as you're putting these deals together, okay? I mentioned it in point number 2 too, is cash flow. Cash flow is extremely important. Don't ever just hang your hat on appreciation only. A lot of other people do that in different markets, I think that me personally, it's a high risk type scenario. I like to invest for cash flow and only cash flow. That's why we call it bulletproof cash flow and not bulletproof appreciation. Bulletproof appreciation doesn't exist. It's not a thing, right? Bulletproof cash flow does. So always invest for cash flow. And number 4, invest today. If there's a deal and it makes sense, and you feel that you can make money for yourself and for your investors, and the lender's going to be happy, go ahead, do it. Start small if you have to. It's okay. There's anything to get you into the multifamily game is really, really important. So if you can use small investments to learn and get the experience, build the knowledge, great. It allows you to open yourself up for new relationships and resources that you can use for those bigger deals down the road. But if you're investing for cash flow and you're investing for those types of deals, then you're going to do fine. All right. But the key is to invest in deals that make sense and to actually take action, because the sooner you start, the sooner your money starts working for you and you start gaining that experience. It's going to leverage you into much larger deals. Now, if you don't know how to do that or even where to start, go to themultifamilyadvantage.com. We help people get into the multifamily game. So go ahead and check that out, www.themultifamilyadvantage.com. Go ahead and check that, okay? So that's it. That's all I got for you today. So I hope that today's training provided some valuable insights into identifying some winning deals, and not only how to identify them, but also how to actually win. The LOI is absolutely critical to opening that door that you're going to need to get control of that deal and make a difference, okay? We're going into a market now where there's going to be many, many, many more of these sorts of deals, and you're going to be positioned to take advantage of it. Now, if you want to know more about how to do this, again, www.themultifamilyadvantage.com. If you're not really sure on how to put these types of deals together, how to craft an LOI, that's a great place to start. Go ahead and reach out, and we can certainly help you get into and break into the multifamily game. All right, that's all I got for you today. If you got got some value out of this, smash the subscribe button, like this. Okay, greatly appreciate it. That's it. I'll see you next week. Take care.